Okay.
Amol?
Hi sir, Amol Dete from the business. I would like to know, like you said, that transmission has to take place. In October also you mentioned that early next year you will cut the rate, which you already did 15 days back, but transmission has not taken place. I want to know what is RBI's view, what could be the reason कि bank rate कम नहीं कर रहे हैं? क्या वो वेट करना चाहते थे इस पॉलिसी के लिए? Because you have seen now in the policy also you have mentioned that there is a revival in the industry, whatever the government has taken the initiatives, but still the banks are not transmitted the rates.
So a couple of banks have in fact cut their base rate. Some banks are, I presume, worried about the fact that if they cut their base rate, it impinges all borrowers, not just the new ones. Given how weak credit growth for the banks has been, and overall financing has been quite strong because they've gone out, large corporations are going outside the banks. I think at banks at some point we'll have to start lending again. And to get that lending, they will have to be more competitive, which means they will have to cut their base rate. Now, we did revise our directions on how they calculate base rate to make it a little more transparent. But I'm hopeful that it's a matter of time before banks judge that they should pass it on. Many have been relatively quick to cut their deposit rates, but not so quick to cut their lending rates. And I presume some are hoping that they can get the spread for a little more time to repair bank balance sheets. Eventually, competition, Sparda? Sparda is what matters.
But sir, since you also reduced the SLR now, do you think that perhaps it's the right time looking at the banks?
I don't know right time. It's their management which has to decide what the right time is. I think it's the pressure of competition which eventually forces them to pass through these cuts. So let us wait and see. It's not regulatory intervention, it's competition.
Okay. Gayatri? One is, how do you see the disintermediation that is going on in terms of corporate opting for CPs affecting transmission? And then you have announced a major kind of liquidity measure. You're replacing export credit refinance system. So how is it going to make a difference in terms of impact to the economy or transmission? That is one. And the other one, NPAs.
That's the third question.
That's from restructuring. Okay. That will you allow acquisition financing in case of chronic NPAs and willful defaulters?
Okay. On the disintermediation, I think that's part of the competition, that banks are now facing competition from the money markets.
Right.
And a number of corporations are going directly to issue commercial paper. And if banks don't react to the lower, number of banks saying I can borrow less than the base rate by going to the markets.
Yeah.
At some point the banks have to react. And so that will push banks to reduce their lending rates. So that's why this will take, I think over time the transmission will take place, simply because there's so much competition.
So do you see this particular factor impacting transmission? Because you said it takes 3-4 quarters.
I think it will help.
So it will help in reducing or increasing the lag.
The transmission of monetary policy takes time because even though interest rates change, the change in interest rate feeds into investment over time. So it's not the first leg of transmission I've been talking about, but it's the second leg once it's gone into interest rates. Now, we're still waiting for the first leg to take place, that is, it has to go into bank lending rates. It has already gone in some way into call money rates, because call money rates have come down. We are infusing enough liquidity into the market, and therefore, I think we will see that transmission operate already, because it's reducing the cost for large corporations to borrow from the markets. Banks will have to match that at some point. In your second question about ECR, ECR was being used less and less. And we thought, given the Urjit Patel Committee recommendation that we should move away from special windows to a generalized auction-based system, and given that we've been supplying plentiful liquidity through that auction-based system, and it's working quite well, we thought that this was a good time to do away with it entirely and move to the full auction. We've been cutting ECR for some time. This was the last stretch which we did away with it. Now we have a fully modern liquidity framework, and I think this is something that will help us going forward. The third question was on acquisition financing. We have no problem with acquisition financing. There are no constraints on it. I don't know what
in case of if there are chronic NPAs or there are willful defaulters, how would...
No, what we have said is in case a plant is not completed and there's a possibility that it was because of the promoter not having enough funds or not having enough management capabilities, that in case there is a new promoter, distinctly new promoter brought in, not part of the same group, but somebody new, then banks could get some more time to complete the project with a new promoter that will put some of these projects which are stuck back on their feet. Now, if there are reasons beyond control, such as the unavailability of inputs and so on, that's a different situation. The other big sort of development on the restructuring is that banks can take equity positions up to the 30% stake. So a couple of banks can gain control if they decide to convert us. There's a convertibility clause. Alternatively, in restructurings, they can embed a convertibility clause, and that will allow them to take control in case the restructuring doesn't pan out as promised. So this will allow a more effective transfer in case there's a need for a change in management. The SEBI and RBI are discussing the details of the conversion, the price at which it will convert, etc. SEBI, of course, is interested in protecting the rights of minority shareholders, and RBI is interested in making sure the banks don't convert at too high a price given the fair value. And so that discussion is coming to some agreement, and we will see in the next few, as I said, within a short while it happens.
Can we go out and check if there are questions, Shaima?
Sure. Participants connected to the audio call, if you wish to ask a question, please press star and 1 on your touchtone telephone. We have the first question from the line of Tweet Raksha from New York Times. Please go ahead.
Hello, Governor Rajan. I wanted to come back to the question of how you are assessing changes in the fiscal space. As you're looking to the budget, are you mostly interested in what the initial year deficit as a percentage of GDP is likely to be, or are you more interested in what the structural changes are on the longer term in terms of what the deficits are likely to be?
I think both. Look, I think the finance minister, as well as all the ministry officials, have reiterated their desire to stick to the budgetary target for this year. But also, there is a lot of anticipation about the, the fiscal path over the next few years. It's not that we're locked into a specific number or a specific path, but it's the overall package, whether it makes for serious high-quality fiscal consolidation over time that clearly will impact the inflationary forces that we are most worried about. So it's all aspects of the budget that we will be looking at and that are eagerly awaited. I think the government has the intent of producing a solid budget.
Thank you.
Thank you, Shaima. Gabriel?
Hello, Governor. Can you hear me? Yeah. Gabriele Parosini from the Wall Street Journal. You have voiced concern today about the spillover of competitive quantitative easing, which is something that you've been doing for quite some time now. I would like to know if you think that India is now in a better position than it was last year or even in 2013 to cope with this coming new wave of quantitative easing that started in Europe. And also, I would like to know if you think that the markets have already priced in completely the coming tightening cycle of the Federal Reserve.
First, I'm not sure that we know fully the process the Federal Reserve will follow. It will depend to some extent on developments on the dimensions that you talked about. As you know, the Federal Reserve introduced a phrase on the international situation in its statement this time. So I have no doubt that the exports as well as the path of the dollar will play some role in their future deliberations. As far as India's position goes, we have made important strides on at least 3 out of 4 macro variables, and I'm hopeful that the 4th we will also move. The 3 on growth, we never plunged as low as some of our comparator countries. Of course, if we take the new statistics at face value, we're already up to 6.9. I don't want to overemphasize that because we need to understand that, but that is one of the highest growth rates in the world. If we stick with our projection of 5.5, we're still doing pretty well for this year. The second element that has improved considerably is our current account deficit, which we project to be 1.3% this year and perhaps even lower next year because of the lower oil price, so long as it stays low. The third element has been inflation. After all, investors are worried about the value of the rupee. That has come down considerably. The inflation has come down, which is one of the reasons the rupee has remained so stable. The fourth element is the fiscal deficit. We have made some strides there, some important strides, and this is where the budget will be an important factor in establishing the continued confidence that our macro actions are all in the right direction. A secondary aspect which is important to help us is the buildup of reserves. Our reserves are substantially higher, even net of forward positions, which today are positive rather than negative last year. And therefore, I think we are in a much better position. Will we be immune from volatility? And the answer is no. I think everybody is affected by volatility. But after the first wave of volatility, when market participants stop to think, I'm hopeful that we will look much better than perhaps comparator countries.
One last question from Anita.
Sir, power producers have been complaining that once the banks categorize an account as NPA or bad, they do not give any further credit. But in case you see that there's a possibility of that account reviving, would you see any merit in banks considering giving them more money for possible revival in future?
I think we should not attribute stigma to an NPA, and this is a misconception that is both amongst producers as well as lenders. The producers think if their account is labeled NPA, it means they're at fault. It just means the account is not paying, and there could be very legitimate reasons why it's not paying, because of policy inaction, because of complications, legal complications, etc. An account could stop paying, or changes in world prices. So the fact that an account is an NPA is an accounting statement. It's not a statement about blame or reputation, etc. That's number one. Second, even an account which is an NPA, banks can lend to it. And in fact, the new loans, so long as they're being serviced, and there could be a moratorium on those new loans also, that loan is not considered an NPA. Our regulations do not label it an NPA. So projects that are halted because they're NPA can be restarted with new loans from the banks. There is nothing that prohibits that. What is important is the banks make a calculation that these new loans are necessary to restart the project, and the package is going to be NPV positive for the bank because it's already made loans which are in trouble. The project needs to go forward to pay off. Here's a little more to ensure working capital needs are met or the final construction phase is done. That's okay. And that's important actually at this time, that in such situations they take a considered decision. I'm not going to micromanage the decision from here, but I'm going to say if those loans are made, they are perfectly appropriate and they will not be considered NPA. In fact, the rules say until fresh loans into an NPA situation are not necessarily NPAs so long as they're performing.
First deadline for classification of restructuring accounts into NPAs. That's a request from the bankers.
Well, I have said repeatedly that it's important we clean up bank balance sheets, that we show the balance sheets what they actually contain. That will enhance confidence in the bank balance sheets and enable the banks to raise the much needed fresh capital. In order to build confidence in bank balance sheets, we have to come to an end of forbearance, that we have to put banks on the right track. We've given enormous amounts of new flexibility in trying to put distressed projects back on track. But I don't think the answer is to pretend and extend or extend and pretend. It is to call a spade, do what is needed, including making new loans if necessary to complete the project, but move on beyond that.
Can I squeeze in a question on financial
well,
stability?
thank you very much from
I
our
have to
side
actually
this time.
catch a plane, so
Yes.
thank you very much.
Thank you, sir.